All right, welcome everyone. Welcome to the CoinRock Show. We have a very, very cool guest today, and we're going to be talking about something that many of you have asked over the last few weeks and months at CoinRock, whether it's on Telegram or on Twitter. And that's about really what happens behind the charts and looking beyond the numbers, beyond the charts. And so we've been talking over the last week or so here with Adam about who is an analyst. So he's really going to kind of expose what's happening beyond the numbers, beyond the charts, especially given today's super volatile market. We'll keep it super conversational. I have a few kind of bullet points here to go over. But yeah, welcome to the show. Feel free to go and just introduce yourself and talk about what you do, what led you to joining Kaiko now, and whatever you want.
Yeah, for sure. Thanks for having me, Matthias. And yeah, looking forward to kind of getting into the weeds on the market and the numbers kind of behind the moves. But yeah, I guess a bit more on myself. I started off working in crypto about 4 years ago now. At a startup in London. We were kind of a retail investing startup, looking at kind of most of the company. It was built during COVID, so it was kind of
Mm,
ran off a Telegram, off a Slack channel, and off a Discord. But we actually developed an app to kind of like have a community on there sharing like their investments, what they're working on. So that was my first real experience in crypto, and I wrote a newsletter and kind of worked on growth there. But writing the newsletter, I was quite interested in kind of, kind of that was one of my talents, was writing. So I liked discussing the market in that way. And from there, I went
yep.
into journalism for a while, working at Business Insider initially, then The Block, which is obviously one of the more established crypto news outlets. Then I spent a year at DeFi Llama's news arm, DL News. And for just about the last year now, I've been working at Kaiko as a data analyst, like a research and data analyst. So looking at the numbers kind of behind market moves and using our data and our insights to make sense of everything and the trends that we're seeing.
Yep.
So kind of what I do day to day here at Kaiko. And yeah, so looking forward to kind of getting into it a bit more with you. And yeah,
Yeah,
thanks for
one of the first questions I ask is when did you first buy Bitcoin and how did you come across Bitcoin? Everyone has a Bitcoin story, so.
Yeah, I was in university and I was in a finance society, kind of standard thing. I was doing economics and sociology, so those subjects were finance was kind of the path I saw for myself. I think like a lot of people in my kind of peer group. So I was in a finance society. In that, I was kind of wanting to do more and wanting to get involved. And I was writing for a magazine, and I thought an interesting topic at the time. It's about 2017, I think, was
Yep.
Bitcoin. And I bought some Ethereum. I bought some Bitcoin. I bought some Litecoin back in the day, kind of around that time. And I actually like held on to them for a bit. I think I had XRP as well. I was about to say Ripple, but you get in trouble for that. You meant to say
Yeah,
XRP.
yeah.
And I think they all went down maybe around Christmas time the following year. Was it 2018? I have the timelines off. There was a big sell off one Christmas, and then it
Yep.
came back maybe early January. I'd sold off at Christmas and forgot about it until 2020. And then during COVID, I was kind of like, oh, do I have any of that left? And I had I had some crypto left on, I think, Binance and some other exchanges, and I played around with it a bit more, and I started working in it. But yeah, I've missed a lot of I've paper hands a lot of moves. So I've kind of become more interested in the broader ecosystem and space rather than trying to kind of bet my future on it or make my millions. I kind of prefer to figure out how it works,
Yep.
and that's what interests me. I do still like try to make a bit of money, but that's not where my expertise lie.
Yeah, yeah. Funny story, like the Christmas crash, right? For the 2017, 18. I was actually walking on, so I was living in on High Street Kens in London, and I
Uh,
was that night I went to the barber literally next to there's a TK Maxx, a TJ Maxx on High Street Kens,
mm,
and at night that evening we went for a walk with my now wife. We walked down Billionaires Row, which is this private street next to the Royal Palace. And I was refreshing the price because that was when it was like peak euphoria. And that day when I went to the barber, the hairdresser was asking me, "Hey, what do you think about this Bitcoin thing?" I was like, "Ooh, this is getting toppy." And so I bought Bitcoin for the first time 2017 too. But yeah, I remember that crash distinctly from like 19-ish, 19,000, and then it was like, oh my God, this was bad. Yeah, very very cool. What's so you joined Kaiko in during COVID?
No, I joined Kaiko started 2024. So I started working in crypto in 2020, yeah, during COVID, at a
Yep,
startup in London. But yeah, I've been with Kaiko for a year now. It's kind of like I was in the journalism side of things, writing about all these interesting things people were doing, and then I
yep,
wanted to kind of get more into the mix with it and be kind of active, kind of in doing more in the market. And
yep.
Kaiko, the opportunity to work at Kaiko came along, and it was pretty exciting. Like, I mean,
Nice.
I can give you a bit more background on Kaiko. They've kind of
Yeah,
like,
yeah, yeah. Yeah, yeah, I just wanted to know more about like what you guys do. And also you transition from basically journalism to being an analyst, which a lot do the opposite usually. They go into financial markets and then they go into journalism. So,
yeah, I think I kind of did everything backwards. I planned on traveling after uni. 2019, I went to Canada, and COVID happened, and it kind of messed up everything. So my original plan was to kind of take it easy for 2 years, and then kind of find my feet then. So everything
yep,
kind of moved backwards. I went into journalism, but I covered Kaiko as a journalist as well, which is interesting. I mean, I would have spoken to our CEO on for a few stories, and the thing that attracted me to Kaiko is, I guess, they've been in the space 10 years now. It was
yep,
set up by Omb, and kind of took it on from Pascal Gauthier, who was at Ledger, and
yep,
it started off as a data company, and there's this Omba's traditional finance background, and realized the importance of needing this kind of market data. I guess when
yep,
other people in crypto were kind of happy to give it away for free and say, yeah, I mean, why do you want this? But now that we look 10 years down the line, and there's Bitcoin ETFs, and there's trades happening on CME futures, there's options on IBIT ETFs, there's more complexity in the market. You're going to need that data to just kind of feed your models and feed your analytics. So it's
yep,
like it's kind of transitioned from a pure data company into kind of data indices, um, risk analytics, and other tools like that. So we have value at risk tools for portfolio management. We've got our own kind of bespoke IV, implied volatility tool. So like that kind of attracted me, because I think the one thing about journalism, and maybe why people go from finance into journalism, is that you can wear many hats and still do like do a
yep,
lot of things. It's kind of fun. You can be kind of a jack of all trades, master of none, I guess. Like, so you can write about what the market one day, or you're writing about a protocol another day. And similarly, in the research side, you're like, you're using IV to interpret moves in the market, or you're
yep,
looking at lending and borrowing data. So that was what kind of attracted me to Kaiko initially, and kind of where I fit in there. So it was a bit of a learning curve to go from journalism and like reacting to the news to sort of trying to get ahead of the trend and spot something kind of in the underlying market ahead of time. But it's
yep.
been exciting.
Nice. So let's get into the market. What do you do on a day-to-day basis for those who don't know what an analyst does? What would you actually do?
Yeah, I mean, I guess start the week, we have a debrief that goes out every Monday. That'll be a sort of look back on the market and what we've kind of seen happening over the previous week. So start of the week is basically getting that out and prepping for the rest of the week. That
This is
involves kind
only
of
crypto, right? Not equities, just crypto.
just crypto, yeah. And
Yep,
like I do keep an eye now more on equities, because I guess you kind of have to look at what, let's say, it's interesting what might be happening with MicroStrategy or Coinbase.
yep.
So like when Coinbase earnings come up, we can actually use our data to interpret the corporate
Mm,
earnings. So if you look at, our wallet data on chain analytics with blockchain monitoring, we can look at what's happening with staking, let's say on ETH or with Solana, and we can kind of interpret then where staking revenues might go for Coinbase.
yep,
So if
yep,
stakings are down and yields down, we can see that stuff. So it changes day to day. Like some mornings I wake up and I've got an email from someone at Bloomberg or the FT, and they've got a data request, or they want to make sense of something, and I jump on a call with them, or I pull some data. Other times it's looking at, it's funny, like you see this in TradFi as well. I have friends who work in equity research, and they talk about using Twitter and Reddit to kind of see what's happening in trends. I
yep.
still do that a lot as well. And like I sort of verify then, I'll see
Mm,
someone talking about what's happening in options markets, or a massive liquidation that's pending on some exchange. And I can go and look at the data then and pull it ourselves.
yep,
We're not like a dashboard company Like we don't have like a user interface that clients interact with. They pull our data from our APIs.
Yep.
So I go on, I do that, and I kind of build some charts. I play around with it. I don't necessarily have the luxury of like, so some people in crypto, like I think it's because it's retail first. There's a lot of dashboard focus,
Yep.
but it's actually kind of easier with the like amount of data we can get. I can go and play around with it a bit more. So like I'm not hamstrung into just looking at 10 things. I can look at anything. So it changes day to day. I like to look at options and IV. I like to look at funding
Yep.
rates, every couple of days, check what's happening with those. I try not to look at prices as much anymore, but this recently it's been difficult not to, I think.
Is the you mentioned no dashboard basically, so not really a retail facing solution. Is that something you guys are looking at implementing at some point? Because you have all the data, so is presenting it for like the average, let's say retail plus user something you're looking at?
Yeah, I mean, we work with media outlets a little bit, and we're like potentially going to do some stuff there where
Hmm.
we might have a kind of media partner that will do that with our data. But for
Yep.
us, it's really kind of, it's a B2B. So we work with a lot of like, some of the biggest institutions in the kind of traditional finance space, some major kind of regulatory bodies. So we don't really, it's just not where our focus is right now.
Yep. Yep.
It might change eventually, but we have kind of retail partners for that. Some of our data is shared on the Blocks dashboard. We might do that with other
Yep.
outlets, and we're always up to that. Like, that stuff's always interesting to get the data out there for sure into retail hands. But I guess we work with media as well. I'll have a request at some point this week from a journalist to help them with a chart for a story, so it gets
Yep.
out there that way as well. But yeah, it's a question we get, but I think we're sort of institutional focused, really,
Yep.
at Kaiko, and I think that we've kind of, our thesis is that data and that need is going to, if crypto is going to be institutionalized and mature into a sort of standalone asset class, that data is important for
Oh
that
yeah. Yeah. Yeah.
into. Yeah.
Well, that's one of the reasons why we reached out to have you on, because I think, you have a very different perspective than the average retail CT crypto Twitter user. So I want to get into that too. I come from the business building side, so outside of finance, went into kind of through friendships and relationships into traditional finance. Never worked in TradFi, but a lot of good, it's a small world when you start getting into business and buying and selling companies. And some of my very close friends run hedge funds, private equity, but mainly hedge funds. So that's kind of how I got into that whole world of, oh, there's this huge space that really makes or breaks the markets. And so I think it's a world that the average crypto retail trader has no idea of, and that's why we wanted to bring you on. So maybe let's get into that a bit more about what. So this word institution, right? What is in crypto an institution, and why do they matter? Basically, why is it? It was a buzzword in the previous cycles. Now it's actually much bigger. What's your take?
Yeah, I think there's a little, I totally agree. There's a lot of confusion in crypto about sort of like, the old joke of like, your size is not size. A lot of like retail users don't understand how big the broader market is in
For
TradFi. And
those
like,
who don't know, by the way, that's a quote from Do Kwon, the founder of Luna, in the previous cycle. So yes, your size and not size.
yeah. And I mean, it's like when I worked in crypto journalism, and we had people come in, I think the best thing for me was people with differing opinions. And that was in
Mm,
the form of a lot of journalists, let's say, and editors that we had come in from Bloomberg, who I didn't always
yep.
agree with, but whose kind of their insight and their history really helped shape my understanding of the market more. I mean, if you look at the fixed income bond market is like $70 trillion. Crypto
Mm,
is like 2.5, 3 trillion on a good
yep.
day. So really, our size is not their size, and it's
Yep.
totally different. So when I talk with institutions, I mean, you see on like the ownership for the Bitcoin ETFs, the ETTFs, you've got like, I think it's like a millennium, likes of Millennium, say Susquehanna, Sig, um, other hedge funds like Citadel's. I think their market
Yep.
making arm might have been involved in them as well. So like those are the institutions I'm talking about. With billions of dollars in AUM. In crypto, we have some hedge funds that are, I'd say hundreds of millions, like centimillions under
Yep.
in assets under management. That's still big, but it's not like this next level stuff where you've got
Yep.
70, 60, 70 billion in assets under management. Those guys don't play around. And
Yep.
when they're involved, it means that, you know, there's a sort of legitimacy in the market, I think, and we're sort of matured to a point where they're comfortable to get in. People sort of, I think I've had an interaction on crypto Twitter where people say like, oh, they're just here like market making and kind of collecting, like shaving pennies or whatever. But the fact that they're comfortable and their risk department is comfortable with them getting involved and doing that
Yep.
is still important. You know, it's still,
Yes.
we're
It's a
getting,
stamp of approval. I've been saying this for, I remember talking to a very good friend of mine who's ex-Citadel, and the moment that level, right, when the true market makers are looking at the asset, it validates the thesis that this is something that actually, and this was in the pits of the bear market. This is something that it's going to be here to stay for sure. It's not just about making money for them. Of course it is, but it's also about it, it's a stamp of approval for the smaller funds to come in.
yeah, exactly. And like, I think up until maybe 2 years ago, up until about 18 months ago, there was probably in back of my head, I was thinking, you know, I was looking at doing kind of threshold qualifications and thinking, you know, I'm going to
Mm,
need a backup here. But I think this year and even like, you know, the last few months, like I've kind of got to the point now where I'm like, actually, this is an industry where we can kind of bet on it. And I mean, I've always been betting on it. It's the only kind of industry I've really worked in my adult life. I've done internships and I've done accounting, I've done finance internships, but this is the really the industry I've kind of bet on. But
yep,
as you say, yeah, like that, seeing that stamp of approval from those kind of players has actually really kind of reinforced that decision for me. And I
yep,
think, yeah, it's just, yeah, it's huge. And as you say, getting three or four of these guys with billions and billions of AUM, that brings in other small hedge funds. It brings in, like, there's regional hedge funds in, you know, the Midwest
yep,
in the US that are probably bigger than a lot of European hedge funds. If they start getting involved as well, it just adds to it. And
yep,
like, there needs to be broad liquidity across the whole market. And like, that's what you see now with having IBIT options on the Bitcoin ETFs. They're nearly as liquid as Deribit now. So,
yep,
Deribit. So like, it's huge. It's really kind of been a big year for that institutionalization. And it's logos, it's big names, it's big money. So it's
yep.
the CMEs, it's the Black Rocks, it's the Citadels, the Millenniums, those guys. That's what I mean, I think, when I say institutions. So
Yeah, yeah, for sure. What's your how's the conversation like when they approach you? Obviously, it's a small space, so names keep coming up. How's the initial interaction? What are the first questions they ask about the market in general?
yeah, I think I won't go into any specific names, but I can give a sort of broad overview of what those
Yep.
conversations are like. And I think anytime I've interacted with those kind of traditional finance players that are in the crypto market, I think it might be cliche by now, but they know a hell of a lot more than people realize or give them credit
Mm,
for. I think for people out
yep.
there on crypto Twitter looking at this from who kind of spend a lot of time in the trenches and Discord channels, they kind of might think, you know, these guys don't get it, what crypto is, and they're going to get blown up by
Or they're
someone.
just boomers and they're yeah.
Yeah, I mean, like they're people like you and me, and like they really know what they're talking about, and they know a lot about traditional markets, and they know a lot about the sort of direction that crypto is going to go. I think they're
Yep.
driving that direction now as well, like with the sort of Black Rocks of the world in the driving seat and sort of leading that ETF charge after, like, I think it took 6 months. BlackRock's suddenly the biggest Bitcoin ETF in the world. That's a sign of things to come. It's not an anomaly.
Yep.
I think it's going to continue to happen. So like when you talk to them, they're aware of how traditional markets developed, you know, with sort of vanilla
Hmm.
products and spot, maybe then multi-asset, more exotic products. And I think we're going to go that way. And that's, they see that path and
Yep.
they see the benefits of certain things, like tokenization is one, obviously. Anything that can streamline the process for them and that can like improve. Whereas crypto, I think, and having conversations with crypto first folks, be that from my journalism background or in my current role, there's a lot more kind of, it's a lot broader, the kind of outlook,
Hmm.
and maybe too broad sometimes. Whereas if you're talking to some more traditional focused people, there's a narrow, kind of clearly defined outlook that, you know, might be more actionable, might be more achievable. So that's
Are
kind of,
they mainly looking to replicate what they did in other markets, say commodities, and using that as a model for crypto for the coming years? How are they viewing the market, especially the new participants, major participants of the last, say, 24 months?
yeah, I think there's a lot of that. Like if I'm being honest, like we had a webinar recently with some kind of guys who've gone from the traditional market making side into crypto now, and they see that happening. They see, look, this is how it happens. There's no reinventing the wheel really. You might change how fast it goes, but it's going to stay the same way. They're going to look at doing a lot of the same things. I think we're seeing that like at the moment with kind of the spot products. We're slowly getting that. There's Bitcoin and ETH trading now on spot in the US. We're probably going to get a basket product soon, be that 5 or 10 assets. I think we have a preference towards 10 ourselves. I think beyond that might be like less liquid and harder to kind of replicate. So we're going to see that slowly. I think that it's going to follow the sort of commodities and equities playbook, but it makes sense. I mean, it works with regulators as well. There's probably no real need to reinvent the whole regulation rule book as well. So like if we're following that like kind of tried and tested path, it makes everything easier to kind of a framework. So yeah, I mean, we're not going to have everything on chain overnight. I think we've kind of realized that after a while. So DeFi summer was good, but it was like nearly 5 years ago now, whatever. And there's not been a lot of progress since.
Yeah. In terms of time horizon, right? I think that's one of the things, especially I'm not crypto native, so I come from Web 1, Web 2, business building. Web 3, as like we talked about at the beginning here, right? So just 2017, 2018. One thing that you see in traditional finance, the time horizon is much longer than what crypto native players like to see or hear. Give some perspective here about the conversations you're having or that you've had. How are these institutions thinking? Are they thinking in quarters? Are they thinking in years? Why are they on this journey, basically?
Yeah, I think it depends on the institution. I think a lot of them, like, I think in any market, they want to kind of capitalize on trends that are happening kind of as they're happening. But there does tend to be sort of hurdles in how quickly they can act, and that kind of comes down to quarterly kind of by like annually kind of targets and goals and what they can get done and working with regulators. So, I mean, if you're looking at pushing out a new product or something more exotic in the basket index kind of ETF world, that could take 6 months just to get approval. So if you're talking about the process then of like, if you want to go and prospect index providers, or if you want to go and offer something as an asset manager, you're going to have maybe not, it's going to take, 9 to 12 months to kind of get everything from ideation up into trading. I mean, I wouldn't put anything closer than that. I think we got the ETF maybe about 8 months after we got Bitcoin, and the volumes were kind of like, they weren't great. It launched. Maybe it might have been better to hold off on that, for a few more months. I don't, we could get some more. Will we see Solana? Will we see RIP XRP? Will we see a basket beyond Bitcoin and ETH by the summer? I don't know. I think it could be, latter half of this year. I think we need to get, the SEC new commissioner in, things like that, before institutions are moving quicker. I think they're definitely always looking at what they can do next, but in a sort of measured approach. They're not rushing into anything. And whereas crypto is sort of build and see, there's a lot of things that launch, and maybe that can have its kind of drawbacks. There can be major sort of calamities and smart contract vulnerabilities, everything else that can happen because things are pushed out very quickly. It's great to push the boat like that and innovate at speed, but TradFi doesn't need to make that risk. I mean, they've got the money. So I think, they can actually be more considered, and in that, offer good products. I think like the Bitcoin ETFs were launched really with the kind of like a bit of handholding from the SEC, because they wanted to really keep it strict. They kind of were cornered in after the Grayscale case, and they wanted to get that out, but they got it out in a really good way. Maybe there's some things that can change. We still don't have in-kind create redeems on Bitcoin ETFs. Essentially, we can't. They're created with cash and they're sold with cash, rather than being able to trade Bitcoin in for shares in the ETF. That's something that I would have thought would have happened by now. So yeah, I'd say, institutions they have clearly defined goals. They know what they want to do, but they're working at the pace of a lot of other players in the market, and wouldn't be expecting a lot to hit the market in the next 6 months. I think, it's going to take time. We're not going to get everything we want all at once, even though the last few months I felt like that in the news cycle.
Hey, Matthias here, and if you're enjoying this and want access to even more alpha, early stage deals and opportunities, and also behind the scenes insights on the markets, hit the link in the description and make sure you're subscribed. It's free and it puts you ahead of the curve. Let's get back to the show. In terms of the market now, what's your view? How are they thinking of course, pullback, it's a bit colder now. What are you hearing them say and think about this?
Yeah, I'm not really. I haven't chatted too much, like to any kind of I haven't heard much in the market. I have friends who are working in other places in the States and kind of chat from time to time. I think
Yep,
broadly across all markets right now, it's a little bit of a wait and see what happens.
yep,
We got there was a lot of last August there's been of uncertainty with the bit of chop and volatility with the whole carry on wine in Japan, and then the election could have been a big issue, but it seemed to price in early that Trump would win. He did. That played out. We got that sort of out of the way, and between
yep,
November and December, it was kind of like, great, this is happening, and then I think end of December on to like now, it's kind of, oh, it's happened, and here's what that means. So now we're kind of not we're like the market's still kind of figuring out what this means, the kind of tariff threats and
yep,
everything else. How long that will go on for, I don't think it can go on forever. I think this. I don't. I'm not a student of history really, but I can't imagine that the trade war could go on more than 6 months without kind of damaging the U.S. massively,
yep.
and the more broader economy as well, global economy. Like if this is carrying on this time next year, then like yeah, it's not just crypto we should be worried about. It's everything
Yeah.
is in trouble.
Yes,
Yeah.
100%. In terms of allocation, when these big funds, not to name them, but what do they think about in terms of how much do they want to allocate? I know the time frame is very different based on the size of the fund. But what's their thinking in terms of, is it a percentage? Is it a number?
Yeah, I think like what we're seeing is like a lot of them are looking at Bitcoin and then a little bit of ETH. I think there was a good example recently. I think it was BlackRock released in their model portfolio. So like what they kind of push on, like what they would say to clients is like you should have 1 or 2% allocation to Bitcoin.
Yep,
So I think that kind of tracks across the whole market, is like that sort of thing. You see it, like I think
yep,
other issuers have said similar stuff. The 60/40 portfolio of like bonds and stocks is kind of gone, and it's going to be like a 60/37.5, 2.5, and that 2.5 can be your bit of crypto, your bit of kind of like added spice. So
yep,
I think that's kind of the consensus across the market at the moment. If you're in TradFi, I mean, I haven't spoken to sort of a pension advisor or anything in a while, but I would be interested to know now if I was like, you know, working on my pension, if I can get an allocation to crypto. I know we've got ETPs in Europe for a while now, but it'd be interesting. I think it trickles down from the top though, from those asset managers. The fact that you have BlackRock saying recommending a 1 to 2% Bitcoin allocation in their model portfolio, that's going to trickle down, and eventually your financial advisor is going to be comfortable with doing that. So I
yep,
think it's limited to those kind of, like Bitcoin has a good pitch. It's digital
yep,
gold. It works. It's been around 15 years. It's sort of synonymous with crypto. So I think if you're a non if you're the uninitiated in crypto and you say, I'm seeing a lot of headlines about this, you know, 1% allocation of Bitcoin translates to sort of capturing all that upside, be that DeFi, be that memes, be that tokenization, because they
yep,
don't know about those sort of themes and sectors. So I think we're still at that point where it's just Bitcoin. We're still kind of early in that sense. ETH is slowly getting there, but the pitch is harder.
mm,
It doesn't ETH. We've seen ETH's own marketing issues. It doesn't really know what it is yet.
yep,
They've
yep,
got sort of issues at the Ethereum Foundation and votes for sort of how they market themselves. So that's going to
yep,
kind of, if that improves, those are the things that will come later. And I think the fact that you have big issuers and you have Fidelities and you have BlackRocks and you have, the Bitwisers of this world who are like crypto native asset managers with billions of
yep,
dollars under management, you have those offering these funds. That's going to improve the education and kind of slowly get there so that we can be at a point maybe in 2 years' time where we're talking not just about the 1 to 2% Bitcoin, but a 5% allocation of crypto that includes, Bitcoin, ETH, Sol, whatever that is, the
yep,
most liquid assets. I think from our point of view, what we look at Kaiko is like, let's say when we create a benchmark or an index, be that the top, like Kaiko 10, let's say, is our sort of flagship blue chip index. We
Yep.
think that's kind of as big as you should get right now as a broad-based index in crypto. In TradFi, you have the S&P 500.
Yeah. Yeah.
You could do a crypto 500, but it's not going to be liquid. So we look at
Yeah.
10 assets and we say, that we rank them by size and we rank them by liquidity. So that 10 is sort of like what you can get in and out of comfortably. Rebalancing costs are lower because they're liquid. So you're not
Yep.
gonna be hitting like when you're trying to move in and out of these assets. So that's for us. I think there's 10. The broader market in crypto, there is no limit to what crypto natives will invest in. And then if you look at more TradFi, it's probably limited to Bitcoin right now.
Yeah. Yeah.
Yeah.
I think crypto native people just sometimes forget that it's actually a tiny asset. Compared to the bond market, it's actually a very small. So beyond ETH, again, I fully agree with what you're saying. Bitcoin, of course, is crypto, and in let's call them the boomers' mind, right? It's like it's Bitcoin is crypto. They still have trouble understanding what the blockchain is, what it is, where is it. ETH, yes, is in those conversations. Of course, I think the foundation has fumbled so many times, even recently with the exactly not knowing how to pitch themselves. It was the ultrasound money, and then it's just they've had a good 15, 20 of those kind of slogans that never really stuck. Bitcoin has been much more consistent, right? So, but yeah, beyond that, of course, it's Sol, maybe, but again, it's really Bitcoin heavy at the moment on the institutional side, on the understanding even.
Yeah, and I mean we're seeing that in the market. Like Bitcoin's dominance is kind of there's been no kind of alt season, and
Yeah,
and and, and any kind of movement outside of Bitcoin has been limited to sort of. I mean, we've seen XRP move, we've seen Cardano move,
yeah,
we've seen Sol hit all-time highs, but we've not seen those sort of what I'd say like if we're looking at on-chain native folks would say like the tokens that they've like loved over the last year or two.
yeah,
If we're looking at Solana, like Jito, like and other things that might have moved that they see value in. And I think I agree with you that it's the size really isn't there. It's a very small market. I've
yeah,
worked with people, I've spoken with people in the past, and they talk, why have you got a pension? Like, and I'm like, oh, like I'm guaranteed this amount of money. I put a bit in, like when I'm 60 or whatever, I can get it. They're like, yeah, but if you buy this token and then it yields you this, and then you can farm this. I'm like, great, yeah. They're like, why doesn't everyone do this? And I'm kind of like, well, let's say everyone comes on chain and does this. All of a sudden, that's a liquid market with
hmm
like, really kind of crammed with people doing the same thing as you. Those yields are coming down, those returns are coming down.
yeah,
A 1.5% move in the S&P is huge,
yeah,
and they don't
yeah,
realize that. And I think it's like, yeah, so we're limited right now. And some of it's with TradFi coming on board and seeing the value in these other tokens. And it takes a while for them because there's no counterparty risk and figuring out like what they can actually
yep,
interact with. But then also
yep,
some of it's actually crypto natives and folks that are coming to this from their perspective, broadening their understanding of the rest of the market and fitting in with that because it needs to
yep,
be both ways. And then like the whole pie will grow and the market
yep,
will mature and the market will become more steady and manageable now, and it'll be better. I think but that we still could be 5-10 years away from that being the case. I think right now it's
mm,
limited. The like what people are comfortable with. What I would be comfortable with in a broad index is around 10 assets. There's probably about 80
yep,
assets in whole that are liquid enough, I think, and tradable enough for institutions to get involved with. Outside of that, it's really still up for grabs.
yeah. What's one thing that retail does not understand about institutions, or a few concepts that, because you're on both sides, you work directly with institutions. What are the things that retail does not understand or misconceptions about institutions?
I think the misconception is like there's some of that are pretty plain. I mean, I think it's some players in the market kind of actually misrepresent the relationship. Sometimes they see like let's say an ETF is buying and selling. That's not
Mm-hmm.
Fidelity. That's not BlackRock buying or selling. That's a huge sort of like one that's kind of misunderstood by the market a lot.
And you
Those,
still see these tweets about the company selling
yeah,
still with
yeah. And it's
incredible
like,
amounts of impressions on Twitter. It's like, yeah.
yeah, I think that's the thing that like there's a knowledge gap there from the finance
Mm,
side. And I think the big thing crypto Twitter doesn't understand is that that's not as present on the other side. Like, maybe
yeah.
7 or 8 years ago it was, or like, even 4 or 5 years ago. But now those institutions, those financial players, they are on Reddit, they are on Twitter, they are scraping information from everywhere because they know they have to. I think
Yeah.
that's the thing that passed. So like the knowledge gap isn't equally balanced either. So like if you're a major player, if you're a bank or whatever, you're actually, you have to be involved, because if you're going to there's going to be custody now in the US for
Yeah.
Bitcoin and other crypto assets. They know that they need to know they need to know what's going on. Um, so I think like crypto folks don't realize what that means and the importance of that. It's going to change what assets become acceptable as well. I mean, certain
Mm,
assets. I mean, if you have a crypto token and more than half the supply is owned by
yeah.
the originator, then it becomes more difficult for some of these institutions to get involved with, because if you're
Yeah.
custodying that and there's 50-60% of it held off somewhere, that creates issues and that creates worries. And if you're a bank trading it, that's potential concerns, and it's kind of a single point of failure. So I think the view the crypto market has right now of what is acceptable and what should drive innovation in the future is mismatched with what TradFi probably thinks.
Mm,
Problem is TradFi knows a lot more about crypto than crypto knows about TradFi,
yep.
and we're going to kind of see that going forward.
Yep.
There's a yeah, I think the biggest thing the crypto doesn't price in is risk. Um, we see it on Twitter. I think people talking about like what hedge funds make, and they're like,
Yep.
well, they didn't outperform the S&P, and they didn't do this. They'll have different benchmarks, and I think, like, if you're a hedge fund, you're guaranteeing 7% every year, no matter what.
Yeah.
That's what it's about. I think some hedge funds service endowments for universities, and those
Yep.
universities use those endowments to pay for scholarships and other things. They need a guaranteed income. That's why they go to hedge
Yep.
funds. They don't go to a crypto trader who got 20% last
Yep.
year. It's not the
Yeah.
same thing.
Yeah.
Trading at scale is about minimizing risk for a return, and like, minimizing your risk to like near zero. And I
Yep.
think crypto doesn't understand risk in the broad sense of it, and that's the biggest issue, I would say,
Yeah.
or
Yeah.
biggest
I,
knowledge. Yeah.
yeah, no, really well put. Um, I agree with that. The difference between, so institutions have become smarter than retail has over the last 5 years. And yes, I think I noticed a big difference even talking to non-crypto TradFi friends who are our age.
Mm.
But I think GameStop really showed that they need to scrape that data, which for us coming from Web 1, Web 2 is like common knowledge. Like you need the more data you have. I mean, I started marketing online before Facebook, but I did very well because I understood that data was king early. I understood that Facebook is valuable and would continue to rise as long as they could get data, basically. Um, I think GameStop GME just showed that that's the Achilles heel for traditional finance, is being stuck in that kind of in the glass towers and disregarding what the people, the masses have. And now they need to scrape. They need to look at sentiments. They need to look at the keywords on Reddit and pull data from forums to understand kind of how how's the mood ultimately. And I think that's something that they weren't doing 10 years ago, 5 years ago, even.
Yeah, and like part of that as well has been a kind of I think with a hiring push. Like I've certainly seen friends and like acquaintances go from crypto into TradFi as well. They're
Yep.
not they're not averse to hiring people. And you've got crypto people who've done CFAs going into banks now, and they've worked in
Yep.
crypto. That's invaluable because like you can come at it from that angle. So they've really improved their knowledge kind of there, and yeah, they were probably caught napping by some of those things 5 years ago where
Yep.
there was an online community that they didn't understand. And
Yep.
that doesn't last for long. Like, the
Yep.
online community might have had an edge for a few days or a week. That's really been closed now. And
Yep.
crypto might get an edge sometimes still on airdrops and other things and early protocol use. but it closes and it's going to narrow
Yeah.
more and more as these institutions get in. And this is what they
Yeah.
do. So yeah.
Yeah. Yeah. No, very well said. What are you the most bullish on, whether it's what you're seeing from institutional or retail? Where is the opportunity for you, whether it's short term, long term?
I think kind of getting, I'm excited about, like, let's say having a basket ETF with more
Mm.
than Bitcoin ETH. That's what I want to see this year. Like, let's say be that 5 or 10 assets.
Yeah.
That's something I'm interested in. Beyond that, I like, I like following derivatives and options. I think if watching the IBIT ETF options market and how that develops versus Deribit, let's say,
Mm.
which like has this massive advantage over the whole crypto market. But they look pretty liquid on IBIT options. So how that plays out is interesting to me.
Yeah.
Yeah, so kind of the development of options, derivatives, and kind of getting a few more assets tradable on as ETFs in the US would be great.
Why are you like, why 10 versus 2 basically? Is it more on the volatility side? What what
I
is
think
the most appealing?
I think with 10 you can kind of capture the broad market
Yeah.
pretty well. You can get memes, you can get L1s,
Yeah.
you can get utility tokens, and you can have a good solid base of assets that are tradable and have kind of efficient underlying markets to an extent.
Yeah.
So I think that's kind of my limit. And then with that, yeah, you can capture more volatility. You might have higher beta to like a Bitcoin ETF, so you can kind of increase returns.
Yeah.
But it's also just like, I think Coinbase International or have a futures market in the US that's
Mm-hmm.
CFTC regulated, and they self-regulate. They can issue, like, I think they have this Doge future, SHIB maybe, and a few others. So like we've got futures products on those. If we get spot products on those, then we sort of grow the market, and more investment opportunities, more of these funds and other issuers might start looking at those assets and saying, "Hey, I'm comfortable with those."
Yeah.
And then, it's a process. So that's kind of my thinking there. That's kind of
Nice.
the limit of what we can get a good, solid investable universe on right now.
Yeah. And the opposite, the other question, what are you bearish on? What are some of the risks that you think people are not seeing?
Yeah, I'm short term. I'm a little bearish on tokenization. I think it's kind of been a big
Mm.
promise over the last year. I don't think it's going to happen as quickly as people think.
Yeah.
I see people talking about kind of, what tokenization assets you can get a hold of. There's also a little confusion still, I think, for me on like what a real world asset token is. Some
Yeah.
of them are just tokens tied to projects, but are they, they're not actually tied to a real world asset. I think we're going to reevaluate what that meaning is as the market
Yeah.
entirely over the
Yeah.
next few years. So I think tokenization is something I would say I'm putting it on the back burner for now. I think it's something
Mm.
that's really interesting. There's talk of $1 trillion market by 2030. I think the city or someone else.
Yeah.
I'd hold off on that. I think personally, I don't think it's gonna ramp up as quickly. I think it's interesting, but it's not something I see happening as quick. And if I don't take a token outlook, but if I'm looking at sort of the Ethereum ecosystem, I think, yeah, until they sort of sort out a direction there, I think
Yeah.
it could be yeah, more pain in the short term there. They really need to, as you say, they've had 15 or 20 different narratives. The latest is sort of, yeah, uh, it's not, yeah, it's not clear.
Yeah.
I can't even remember. So they'd be my kind of areas. Yeah.
Yeah. Good point by ETH. I mean, I remember, I'm sure you can find the interview with the Winklevoss twins, right? This was well over 10 years ago, and they were pitching uh, Bitcoin as digital gold well over 10 years ago. I think it was 12, 13 years ago. For those who don't know, they were some of the biggest and earliest buyers of Bitcoin. And so we're seeing the same pitch, the same framing of Bitcoin today. So of course, it's been ingrained in the public's mind, and that's what repetition does, right? And so yeah, on the other side, I think ETH will have its day for sure at some point, but I think there's a lot, yes, there's a lot of work internally that needs to be done to actually align everyone. Okay, this is what we are. This is how we want to be perceived. This is who's leading this. It's been very messy, even from the outside. So God knows how messy it is on the inside. It's usually a reflection. So it must be very interesting in the foundation itself. Okay. Last question here. You are the oracle. If you had to make one prediction about the markets in the next for the next 12 months, where are we in 12 months from now?
Uh,
Or what happens during the next 12 months?
I think during the next 12 months, there's a bit of consolidation. This is, my personally, I think it's not going to move. I think last year, maybe 4 months ago, people were bullish on 150, 200K Bitcoin.
Yeah.
I would fade that for this year
Hmm.
from what we've seen early on with the administration and where they're signaling where they want to go. Maybe later on in the year we might see the kind of macro outlook change. They might look at kind of moving beyond QT and maybe quantitative easing. So, liquidity
Yeah.
might improve globally, but that would be maybe I think we won't get that to that place until after maybe Jackson Hole in August. So
Yeah.
right now I'm looking at I think it could be a grind for a while. We might,
Yeah.
it might move sideways. That would be my personal outlook. I'd like, happy to be proven wrong on that, but
Yeah.
early signs are more volatility, but trending downwards potentially.
Yeah. 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 Um, I agree. I agree. I literally just wrote an article for CoinRock Media. I'll send it to you. About the Trump Fed relationship, and that's also a whole it has its own dynamic, and I definitely think that there's more pain ahead in the short term. It will turn around, I think, just because Trump likes to win, and
Yeah,
he wants to have and again, for a president, he wants to be able to brag that he helped the economy. But right now, I 100% agree it's going to be in the short term choppy down, and I think it's just a time to be patient now.
yeah, and I mean, like I think a good kind of like thing to reinforce that outlook as well is looking at the news of the SEC the last few weeks and cases being dropped. Solana
Yeah,
have futures coming on the CME. Market's not budging. There's a
yeah,
structural change happening. People
yeah,
are risk off at the moment. They're saying, hey, so like if you see those headlines and you see the market moving lower,
yeah,
step back, I think, and like
yeah,
take your breath, like take a breath for a while, take a breather.
yeah,
Yeah, I agree. The Fed stuff will be interesting how that plays out, and yeah, because I mean, he said the Fed need to lower, but he has where that kind of oversight, where he oversteps the line, and where the Fed how the Fed react, that's going to be an issue for markets to digest as well.
yeah,
So no, super interesting few months ahead though, even if it is choppy and even if it is in the red.
yeah, yeah. All right, thank you for joining us. We'll put the links to anything, so your Twitter, company, and everything around this video on the website. We'll have like a few some articles you done about like some of the. This is why we wanted you on, is really like having the institutional view that many people don't, again, understand what an institution does, how they think, the time frame. And yes, they don't go on and just, market market buy on Binance or Coinbase. Like, these things take time. They're big ships. They move slowly, but they move heavily when they do. So thank you for that perspective. Would love to have you on maybe after the summer once we have this movement. Uh,
Yeah,
I definitely think something will happen with the Fed and QE, QT at some point. So I think that's a good opportunity to get you back on and talk about that when it does happen. Any closing thoughts?
no, that's all. That all sounds good. Yeah, I'd be happy to come back after the summer and
Nice.
chat again anytime. And yeah, thanks for having me. Really enjoyed the chat.
Yep.
And
Yep. Very cool. Thank you. We'll talk
no
soon.
worries. Thank you. Chat soon. Bye.
Hey, thanks for watching. If you got value from this episode, you're going to love what's coming next. So subscribe now. We drop new episodes and videos several times a week featuring power players, market movers, and insiders from the financial world. And if you want access to deals and insights we only share privately, hit the links in the description and we'll see you on the next show.